All attendees are in listen-only mode.
Hello everyone and welcome to our partner webinar with Profit And this week. We will start with a short introduction to Anaplan as well as Profit And, followed by a demonstration of the transfer pricing app, making the whole demo last around 30 minutes total. If you have any questions, feel free to send them to the email address in the chat box as we are unable to answer the questions in real time. I am now going to hand over to Pavel from Profit And, who will be leading our demonstration today.
Thank you, Laura. It's a pleasure to have that slot and talk about transfer pricing topic and how it can be done in Anaplan. So thank you everyone for joining. Quick introduction from myself. So a couple of words about Profit And. We are obviously Anaplan partner, delivered a number of successful projects, seen how and still looking for new ways of using that software. We've been around implementing profitability and cost management, mainly solutions, for more than 10 years. Mainly those solutions were aimed at helping management team to make the decisions and providing management information on key profitability metrics. Those informations got interest from tax transfer pricing departments because they were containing the key metrics that they now are obliged to provide to the regulators. And first project we delivered in 2012. Learning from that, we moved on and delivered a number of projects, currently implementing transfer pricing solution for a number of processes. And that's for a global pharma company. So that's a quick intro from me, and if I just set up a quick plan for what we're going to cover today, I've got a couple more slides and then the application to show. First of all, I would like to talk about the transfer pricing challenges, how we see the clients, what type of problems they are facing, and our solution to that, covering also more detailed processes that we can support. So if we go to challenges first. So from my point of view, I can see that this transfer pricing management problem particularly arrived after the financial crisis, and when the governments noticed that they have too much debt and they have to find a new way or a more effective way to collect incomes, and that income is from tax. Main focus became global corporations that perhaps had still legal but very complex schemes to maybe try to pay less tax as a group, so they could move the profits to the parts of their companies that were maybe situated in countries with lower tax rates. One of the main regulation that has been introduced recently, and it's been still rolled out, is OECD putting the pressure on companies to disclose net profit by legal entity, product, function, and an allocation method. And that all led to quite a big process that had to be done now in tax transfer pricing departments. And obviously first choice is Excel, and that's what we see our clients are trying to attack this. But because this is so complex, multiple data sources are needed to be connected. Quickly those clients are realizing that this is not the best way to manage this. So what I wanted to maybe go quickly is a scenario that we typically see every client is facing, and hopefully you can relate to that. We see that the typically process of managing transfer prices is starting the budget. So we're covering here a scenario where we're going to be, from transfer pricing point of view, covering service recharges and the process of setting the transfer prices for tangible goods, following on how we monitor that. So when we start with the budget, we've got some kind of service allocation spreadsheet. We get a download of the budgeted P&L. we got some drivers, and that allocates the services that typically finance, some global marketing, IT, that typically are centered in few places around the world, most recently India or Eastern Europe, and they have to be recharged. They are subject to transfer pricing regulation. They have to be recharged at the arm's length transaction to the companies that are receiving those services. So it's a quite simple allocation, but it's fine if it's just one company to deal with. But as our clients have even 150 legal entities, that becomes quite a big spreadsheet. And obviously, you have a problem with going through the number of iterations and different people putting different comments. And once you've got that service allocation in some kind of form and shape, you know what the flow of the recharges is through your group. You're now ready to provide or start producing the P&L segmented by function. And this function typically are service providers, manufacturers, distributors, IP owners, and so on. You segment that P&L because you've got now the information, what is the recharge, so you are able to reflect those recharges. So you do the P&L segmentation next. You again go through the number of iterations. Maybe someone in the meantime updated the budget on a particular material number, and you had to rerun the service allocation. So you have to manage this quite complex spreadsheets with a number of versions going around. But that's not over yet, and we just at the budget stage. Now when you've got a semi-final version of P&L segmented, you're now ready to perhaps start planning and seeing how the transfer pricing for tangible goods would look like. And then again, you go with the number of iterations. Fortunately, you've closed that budget session, but now we come to actual. And what happens is, because this exercise during the budgeting was so hard, it was multiple data sources, number of iterations. People don't do this every month, which would be perhaps quite useful, and they see that is what's needed. But nobody's going through this big effort because it's just too much. Takes too many weeks, too much manpower to process this. So what our clients do, they invoice everything as per budget. So they recharge monthly the services. They produce the intercompany invoicing for the services based on the budgets, and they issue invoices for the internal sale of the goods based on the tangible goods transfer price set as per budget. And they do this throughout the year. Maybe around October, they will have or month 10, they will have a review. They will go through this exercise again to see where they are, and if there are big variances in profits, they will post the true-up adjustments, which is just big adjustments between legal entities, just to make this bottom line aligned with what the tax requirements, tax jurisdiction is allowing you to make in for this particular product, for this particular legal entity. For example, it's allowing you to only make 5% net profit. And if you are outside of this range, there has to be a big true-up adjustment made. And then obviously when you close your year, you do that true-up adjustment after you closed December, and it's usually quite late. And there are also big true-up adjustments. So what are the implications of this? Mainly, this is connecting a lot of the sources. So it's and a lot of versions of the Excel that produces a lot of errors. Also, because of those errors, you are exposed to penalties and some reputational damage. Because you're invoicing everything based on budget, and you don't have ability to monitor your transfer prices set per month and maybe adjust them as you go along, or ideally allocate the service recharges as per actual usage, not the budgeted. You have those big variances, and some countries don't recognize those true-up adjustments. And what you end up is the situation where you overpaid, for example, VAT or custom duties because you set your prices wrong, and those specific jurisdictions, tax jurisdictions, will not recognize the true-ups once they've collected the VAT, maybe on too high prices. They simply would not allow you to any refund, so you end up paying too much tax. What also happens is that clients have these big solutions, and it's only few people that actually know how it all works, and big hidden VBA scripts in Excels. When some key people leave, then there's a big problem. So having this solution moved from Excel to something like Anaplan, I think makes very good case. The next, we talked about problems. So what's the answer that Profit has to this? So based on our experience, we identify these 5 key aspects. The first one is automation. Because you have a number of different data centers, it's the data hubs that you're linking to. Some of them would be probably flat files. It really makes sense to connect them into one place, and Anaplan is absolutely great to that. You can connect with multiple sources and have this pulling data from different sources automated, including your hierarchy. So if you've got a new product or a new type of service, you simply add it, or it's updated based on your master data feed. Comparing this to updating this in number of Excels, that is a big improvement. Second one is agility, and here is great modeling capabilities of Anaplan that comes through. You can easily make changes. If you're going through the restructuring, you want to play some scenarios, you can easily build those in, build key variables calculations, and change those criteria quickly, and see immediately the impact, and compare those and see the bottom line, see the effect on tax to the group. Then control. This is what we often see is clients ask individual controlling teams in different countries to prepare the data feeds, or somehow in some way processed part of the data for their transfer pricing processes, and that is done in a number of ways, and each Excel looks completely different. There's different methodologies applied, different data sources. When you're looking at your final number and maybe your tax, the taxman comes in and asks you about the numbers that maybe relate to 5 years ago. We had this particular case with one of our clients. They could not match the sales number for a particular period, for particular product, to any of the system. That person that produced that report left, and they were very exposed. So it's very important that you maintain that control, that you have the track of where you're linking, where is your data coming from. Another aspect of control is that the fact that you are having everything automated, you can run it actually without a big effort every month or however often you want to. So you can be on top of identifying the variances, so you don't have to post those large true-ups at the end of the year. And lastly, transparency. The way we've modeled these applications allows you to see through the allocation, go back to the source, identify what the allocation is based on. Also, the fundamental functionalities of Anaplan allow you to have the audit trail, see for every cell what has been changed and who's done it. This is absolutely critical and applicable to transfer pricing. So before we go to actual demo, I have a couple more things to show you. So first, maybe we go through the processes supported, starting with service recharges. We talked about this. We do that for the budget, then we do it monthly for the actuals. The main output is production of intercompany invoices. And what we recommend is doing waterfall allocation methodology for the full transparency. Once you've done the service recharges, we can go on and process our profit and loss segmented by business function. We can see where the variances are, and based on that, we can also set our transfer prices for the budget, but also we can monthly recalculate, also run the latest forecast, and we can support a number of calculation methods for the transfer price, cost plus or resale minus. Anything can be built in Anaplan thanks to the good calculation engine and easy function build. Once we set the prices, we can also support the transfer price updates. If you decide that for tangible goods, the transfer price, actually the variance is quite big, quite significant, we can actually create a new price that will not only adjust what has happened year to date, but also based on the latest forecast, you could set this price so your variance isn't close to zero at the end of the year. We talked also about scenario modeling. You can see the impact, play with the scenarios, see how if you introduce new products or services, how that is impacting the bottom numbers. And lastly, the process that is greatly appreciated and supported is reporting, including the assisting in annual TP reporting. It helps you definitely defend against any inquiries that you have. So how the typical data flow looks like. We've got obviously Anaplan in the cloud, our calculation engine. The data inputs would typically be the one provided from transfer pricing department. You decide what are your activities or services that you provide, the legal entities, functions. So we mentioned there could be typically manufacturing, distribution, IP owner, maybe, and so on. You decide what are the allocation criteria and what are the targets set for the particular legal entity. Then another type of data is transactional systems. You put your P&Ls and prices and so on. And for budget and forecast, you get that from your planning systems. And lastly, operational data, drivers such as square meters, hours, are typical drivers that we use for the allocation. Where do we take this data from? So they could be either coming from ERP or data warehouses, or they could be from the flat files. We usually have a mix. What we tend to have is we pull the hierarchies, the master data from central data warehouse that perhaps is in place. P&L data, prices to the third parties, and any other data we can also provide to Anaplan from the flat files. You've got a reporting layer, of course, that you can rely on and present the results in the Anaplan. But the main two outputs are also needed back to ERP. And those two main outputs is intercompany invoicing data from our service recharges run. And the second one is transfer prices for finished products for tangible goods. And before I go to the actual demo, I'll just go quickly through the key functionalities we see from profit and perspective as the main selling points and the reasons why we should choose this particular technology for this problem. It's great multidimensional tool, allows you custom calculations, and the processing power is great comparing to other tools. Traceability. We talked about this traceability and control factors. That is greatly appreciated and also can be addressed in very good way by Anaplan using the fundamental functionalities. Often I'm being asked how we can maybe link the benchmark study files to the targets that we enter. That can also be done in Anaplan, and almost creates the Anaplan as the central point of the information about anything that you do around your transfer price setting and monitoring. Data integration, I think from the previous slide, we've seen that we can connect to many sources and get it automated. Important point is that it can be managed by finance because there's no complex programming language that you need to understand. All the allocation management, the way we build the model, you can link the source to the driver and to the target, all that using very friendly visual interface. Workflow is another point. There is an embedded Anaplan workflow or a custom workflow, which we probably tend to more do is something to help you manage the process of approval, mainly through apps adjustments, so you can have full management over that annual kind of review of or monthly review of your legal entities, and you immediately can see where you are. And assist scenario modeling, I think this is great functionality embedded in Anaplan that you can just click and create a new scenario, and you can immediately just play with different scenarios. I think so. Benefits are very obvious. Just this is the last slide, I promise, before we go to actual demo. So you're in total control and governance of the transfer prices. You're improving your spend on the taxation, reducing the risk, and you've got this automated process that is supported by the technology that can really help you in changing the model immediately once your business is changing. So that flexibility is important here. So I think I don't want to kill you with that slide anymore, and I think we're all very keen to see the actual demo. So let me just go now to actual Anaplan, and hopefully you can see my screen now in Anaplan. And the first screen I wanted to show you is a high-level view of a group P&L, or maybe key performance indicators that are important for the transfer pricing manager. So we look at a company that a GoFit group that has the legal entities across the globe in different countries. It's manufacturing food supplements and nutritions, and it's manufacturing those in two key factories in two key legal entities, and distributing this across using the distributors for the regions. So there could be a scenario that one legal entity could be a manufacturer and distributor, and that's what we often see. And then that's the scenario where, and it could be also not only distributor, manufacturer, but also service provider. So you have to be at some point able to segment that P&L. So what you see here is what is the operating margin, what is the return on sales currently for that legal entity, the return on sales, the target that you've agreed or you've been told by the local government, local tax authority, that this particular legal entity, when it's performing the function that is distribution, so we're looking at the distribution part of the P&L or that function, this legal entity is allowed to do a certain percentage on that. And if you're outside of this range, Anaplan will tell you. And this information is all by products, by different IP owner. Because I was inactive, I got kicked out. So let me go back. Hopefully because it's the same. Yeah, okay, let me set it up. So you've got number of products, number of legal IP owners, number of legal entities. You could have the function type. We talked about this, different functions, and also who is the actual trading partner to this transaction. Having that high-level view, you would typically go through every individual case where you need to make some action, and Anaplan can help you with that, or that almost is telling you what is wrong. So what we've got here is clearly not on the target when it comes to the France. So once we've identified that, we can go on and use another view that we've created to process this adjustment. Just before we go there, I think I wanted to draw your attention to how you could manage the legal entity from the transfer pricing point of view, where you could put your manage your tax rate, define whether it's a distributor, manufacturer, or service provider, or any other type, and if that's so, what is the method that we have to apply? What is the metric that we're controlling this legal entity on? And depending on that, we can then perform the calculations and see where the variances are. Important thing is you can just hyperlink any source that gave you the information that made you to say that this particular legal entity is allowed only to make 5% markup. You've done the research in the industry, or you've got the supporting documentation, and you can simply link it to that place. But if we go back to our case of France, where we're clearly not meeting the target and we want to find out why, let's go and see how that's going to look like. So what we see is now slightly more information on that legal entity. We've got France, which is now broken by different products, and it's telling us what is the trading partner to that transaction and who's the IP owner. We've got some key metrics from our P&L, but Anaplan almost is telling you what you have to do in order to fix your variance. So what if we, for example, process the adjustment? So we can see that for that particular product, that was the problem. You could, in comments, put some description, and there you go. You go back to you would like to request the approval from your manager. You would go back here and check that you are now quite close to where you should be. So that gives you a great ideas of where you are and what you need to do. But before you actually are able to do this, this is a P&L that is broken down, we see, by product, by legal entity, IP owners, and functions. So that clearly is not the information that you have readily available from sources, from the systems. So there has to be some allocation that needs to be done. Well, first allocation we talked about is definitely the service recharges. They have to be reflected in this particular legal entity to be able to determine the operating expenses. They'll be including, they're not typically by product, so there has to be some allocation done on that. And we developed as Profit and having our huge background in implementing profitability and cost management and specific and different types of allocation, we developed an engine in Anaplan that allows you to allocate cost. And what I want to show you is an example of how you would do that for services allocation. I'll go to my first dashboard, and the legal entity that we've chosen to be our service provider is Sweden. And the starting point would be loading some data, whether for actual or for budget. And in our case, we're just loading it by cost type, some kind of staff and marketing cost. Sometimes we see that companies are loading this not maybe by cost center, by account, sometimes by profit center as well. and that can all be facilitated here in Anaplan. Those numbers that you pull to Anaplan for these purposes could be maybe reflecting the gap adjustments. So you could manage this layer of adjustments as well in Anaplan. But here we just stick to simple scenario. We get our data ready, and we have to decide what, depending on what type of cost that is, what is driving it to the services. So if we know this stuff based on some kind of time effort or whatever is the best driver for this particular cost, we're going to be allocating this to the services which are managing PR, running TV campaigns, and whatever types of services this legal entity is doing. In this case, it's providing marketing services. So this is the services that we've got in this example. You could have a scenario where for the particular cost, you know this is only related to your own to your own legal entity, so you don't want to allocate, and you have the ability to also set that on that level. But if we go back, another functionality that we built here is perhaps my driver is not ideal to allocate based on the time effort in that case to all the services that this time effort will be entered against. Perhaps I want to limit my targeting only to specific services. At the moment, I've only allowed this to be allocated to 2. If I change that to 3, Anaplan will automatically reflect that. And what in the end we've got is this type of cost that we have now visibility per service. So that's the first step. We've allocated this to services. Now the second step is that cost of service that we've got now, we want to allocate to the receiving companies. So we know what the services are. Again, we choose the driver that describes the best the linkage between the service and the receiving companies. Managing PR, well, we're going to allocate on sales volume, and running TV campaigns, we're going to be doing this based on number of campaigns and the driver that you have available, and you see that fit. Usually clients, they know what is driving their cost. So this is the place where you manage the driver and you link it to service, but also you manage the level of the markup. So you manage that on the level of combination of legal entity and service. So when you apply, you've got your cost per service, you've applied your markup, you've got no cost to allocate, and Anaplan will perform that allocation, and your final result is this particular cost basically distributed across other companies. And we've talked about in the slides about the exports, what are the final result of this model, and this is the servicing invoicing that I'm going to show you is an example of the output that we see the clients as a big improvement to the process that they manually have now. What you can see is for which version you're running it, who's the sender of the service, who are the receivers, which part of the type of cost it's relating to, and what is the service and what's the amount to invoice. And that is something that can be now uploaded to your ERP system and process the invoicing. The last thing I wanted to show you is so far we've covered how you monitor and set the price, and how you monitor the prices on the high level, and how you can manage your true-up adjustments, how we run the allocation. And lastly, I wanted to show you how Anaplan could help you in adjusting the transfer pricing during your year. So in this example, we've got lists of all the products and trading partners and IP owners. in this particular planning period, or whatever period we're running this solution for. Some key metrics like sales volume, operating margin, and return on sales target, and what is the required transfer price. So what should be the transfer price to hit that 5%? What is the actual transfer price that we have in our system? And Anaplan can highlight maybe a particular products that require these updates. We can manage that individually. Perhaps we want to add a couple more to improve our prices in our system, and we can simply by click again produce a similar output to the service output, but this time this is the transfer prices for the tangible goods. Basically, who's sending it, what type of function that is, what kind of products, who's the trading partner of this IP owner, which period that relates to, and what's the actual price. So as we are actually running out of time, slightly over, I think we allowed about 40 minutes for this. So this is everything for today that I wanted to show you. Hopefully you enjoyed this webinar, and if you wish to find out more, please contact us. I'll probably email everyone individually with my contact details and the slide. If you want the slides, just let me know. Thank you very much. Laura, would you like to say anything at the end, or?
No, just thank you for that webinar. It was brilliant and really informative. And yeah, I've got my email address in the chat box as well in case any of you want to take that down quickly. But like Pavel said, we'll be following up shortly. Thank you, everyone.
Thank you. Bye.